So I guess it's a bit of a blatant pitch for people like myself and Andy and Jeremy to start with, but these assets, agriculture is relatively complex. So I say to my clients that we have to manage markets, people, weather, and animals. And so those four things together can be reasonably challenging from time to time. On top of that, as Andy's already explained, we have a relatively dynamic, changing environment, both from a market point of view and legislative point of view. But fortunately, there are a few of us who, I guess, have already done a lot of that learning for you. So, say my business, we've been involved in asset management now for about 30 years, mainly for iwi, but increasingly for private equity and funds as well. But people like us, Andy, McLaren little business, we spend our entire lives doing this stuff, so hopefully you don't have to. So we can, most of our people like us, we do manage everything from asset evaluation right through to how we manage those farm businesses, basically try and help de-risk and ensure more consistent performance. Next slide, please, Rachel. So I wanted to talk to you just briefly about three main things. The first one is due diligence on buying farm assets, because the glossy brochures do tell a pretty good story, and the guys at property brokers and lads at property brokers do a good job of putting that stuff out there for you. But obviously, it's not as simple as that. So good due diligence involves a number of aspects, because these assets can be quite complex. So it's important to get an understanding of, are the claims that vendors are making, are they valid both in terms of actual production and in some of the properties that Paul just talked to you about, is that potential actually there? Good to get an assessment of what status quo profitability looks like, stuff that Jeremy was talking about. Get an idea of the likely yield and particularly the variability of this. So as Paul indicated, where we have irrigation, we can get quite consistent levels of production, but on unirrigated properties, particularly in the North Island, it can be all over the show a little bit. So we expect to get a slightly high yield in return for that, but need to be aware of what the potential is to manage risk. Increasingly, need to understand what the environmental limits are. So they vary from catchment to catchment, from region to region. They can have a huge impact on both current and potential productivity. And as Paul's also alluded, there can be some both immediate and future investment needs. So you might buy a farm property that you will need to spend the extra capital on to get the housing up to standard, to ensure that effluent management is correct, to make sure that you can meet environmental limits. And particularly for people who are not familiar with the agricultural investment, the due diligence process is often a really good way to allow yourselves to become familiar with some of these key metrics and criteria. So that way it allows you yourselves to build institutional knowledge, so you don't have to be reliant on people like myself, like Paul, like Jeremy. But also to allow you to quickly identify which are the good ones and which are not, because due diligence at this level now can take some time. It's not a back of the cigarette packet job anymore. It can take time, and it can be time equals money, obviously, both in terms of opportunity and professional services. And so you don't want to be spending that money unnecessarily if you know it's going to be done at a start with. Next slide, please, Rachel. So that's DD. Then for options for asset management. So you remember that slide that Con put up right at the very start, and if you could read the small print, you could see that there, across those asset classes in agriculture, there were often a number of management options. So effectively, when you own a farm or an orchard, you can do it a number of ways. So at the top of that, full employment of your on-farm teams generally will give you the highest level of return, but the greatest complexity, because you have to deal with all four of those things I said before, particularly people. And as Paul indicated beforehand, people management and people capability, I think Oliver alluded to earlier as well, has a massive return on farm performance. Go down, as you start to de-risk those assets, you tend to reduce yield, but you do have de-risking. And so we have the contracting out of employment, effectively through contract milking agreements or equity management agreements, and ultimately share, and then through to share farming, where people will have a significant amount of equity in some of those assets, typically the operating assets, livestock and plant, right down to leasing, where you tend to have the lowest cash returns from a pastoral agricultural point of view, but you tend to have the least complexity. But in all those scenarios, as an investor who maybe is not going to be as hands-on as you'd like to be, having independent oversight or supervision can both add value and reduce risk in all of those scenarios. People often talk about leasing being a risk-free investment. It is absolutely not a risk-free investment. And a badly managed lease property can go south way faster than, or just as fast as a poorly managed, fully operated property. And so in terms of what you might expect for independent oversight from a business like ours or McFarlane Rural Business, there's a continuum from pretty much the full Monty, full works, effectively complete hands-off asset management, and we do that for some clients, through to more oversight, where owners retain more of that day-to-day oversight role, right down to state advisory. But effectively, you'd expect to have regular farm inspections. That includes not only just making sure it's a job being done right, but usually the provision of business advisory as well to try and help those assets work harder for you. You'd expect to get regular reporting on operations, asset management, potentially full financial management oversight, so the budgeting processes right through. Some of our clients require us to even do payments on their behalf, and we do all the variance reporting, reforecasting and so on. So just like any sort of corporate asset management business. HR would be largely dealt with. Contract milking agreements, share milking agreements, very popular with people because HR management can be costly. And so it's quite often good to contract that out. You do pay a premium for that. You either pay it to someone you can do that work for, or to the contract milking agreement. Increasingly, obviously, and equally importantly, making sure people get home safe every day. So health and safety is a big thing now, and management and environmental compliance is also something that most asset management firms or businesses would take responsibility for making sure what's going on. I think this is my last slide. And I guess ultimately just the benefits of having that is, in my view, that probably maximises your chance of getting consistent performance. So no matter how good someone like Jeremy is, he probably isn't going to be able to manage every situation perfectly well because we have people involved and we can't be on farm every second of every day. But it does generally mean you'll have more consistent performance moving around. Typically, the amount of time that goes into managing a business like this is fairly consistent. So if you have good staff or good people in your teams, then someone like Jeremy or Andy or myself can actually help accelerate those returns as opposed to simply making sure that they don't go out the back door. Typically, you'd expect someone like us to help you identify further growth opportunities, both within the farm gate, so how do you optimise your asset, but also what else might be coming up the lift shaft. Critically important, we help develop the institutional knowledge of owners. So really important that you're going to invest in anything, you understand it. And so initially, for many of you, if you're investing in a farm asset the first time, you may not understand all of it, but hopefully by involving some independent advice in that process, you would develop understanding over time, which improves your ability to get better returns and see opportunities. Certainly it would reduce the risk of non-compliance, early identification of performance or regulatory risk, and then usually also access to other additional services and insights because most of us are not one-trick ponies. And I think that was my last slide.